Hey guys, it's Nolan from TradeAndTrain. Hope you had a great day. We've had a good day. Hopefully all of you saw yesterday's video which we sent out with Mark. Yeah, we went through a few charts, but the main subject of the video was Kiwi dollar. And it looked like it was about to take a nice turn to the downside. So this is basically what Mark showed you. This is the 4-hour chart. And we can draw in some support here, and we had resistance. So basically, price had come into resistance, and we were anticipating that price was going to drop all the way back down into this supportive trend line. And in fact, on the 15-minute, we'd had this little change of cycle as well. We've had this high, higher high, and lower high. I'm pretty sure there was, although he wouldn't have actually indicated it directly, but I'm pretty sure there was a trade set up there as well, or a suggested trade setup. It might have been that, or with the stop above that high, and all the way, down here. Now, I know for a fact that we took a sell stop below this low here, stops above this high here, and we went for a target of 0.666. In fact, there was two targets, and that was the second target. And as you can see, due to the Ukraine-Russia tensions and President Putin doing what he does, the market actually just dropped. It went into a risk-off sentiment, and we saw the market just sell off basically, and the majority of the money flow went into gold, which we can have a look at a little bit in a few minutes. But let me just close this, and you can see that basically it actually came into our target of 66 or 666. Unlucky for some, and it actually came down a little bit more as well, and now it started to bounce. So we took a nice 2.6, I think it was 2.64, 2.6% on that earlier. Our members did. So I mean, that was a really great trade setup which we shared with you yesterday. So we really do hope that some of you, or actually we hope that all of you, were able to get involved with that and make some free money basically. So what's next for Kiwi dollar? Well, so we've come into support and we've started to bounce. This was a very sharp move. Now what I'm looking at here is an impulse down, and this potentially a correction, and we could get another impulse down, at least testing this low, or you can use Fibonacci by drawing the fib from the start of the impulse here to the bottom. You can see that price actually came into the 78.6% fib retracement, and yeah, we've got our zero here, which was the bottom of the impulse, so price could still test that, and we've got further extended targets of the -27 and -61 if price was to continue to drop. But what's it going to do? It could come and test the top of this channel again. By the way, I've missed something out here, and it was this. Which also added to the trade idea, if you like, that we should be looking to sell. Basically, we'd had a flag pattern here. Price had broken out, retested the flag, and we were getting the sellers come in. So that was another reason why we were looking to sell this. So what could happen now? Well, certainly if we break this low here, I would certainly be looking for price to come and test this bottom low here, and then if we go any further than that minus 27% fib extension. So I would certainly be setting alerts below this low here, because if that market sentiment, is risk off and sells off again, Mr. Putin, if he does something, we're going to see Kiwi. Look for basically the Kiwi, the Australian dollar. They're the most popular ones to sell off. CAD as well, but Kiwi and Aussie, have a look for those to drop. We would normally see yen strength as well in a risk off sentiment, so look out for yen strength as well. But Kiwi dollar, what are we doing now? Well, let's have a look at a smaller time frame. It's quite possible that this is a correction before we drop. Okay, so I wouldn't get involved in any shorts now though. Like I say, I would wait. I would set your alert below this low here, and then I'd get short if we, or I would suggest to get short if we break that low and continue to the downside. But at the moment, let me just have a little look at the daily candle. So that's the weekly, because we are getting close to the close, about 50 minutes to the close. Okie dokie, 4 hour. So that is a morning star pattern off resistance. I would wait if you're going to go long on this. I would wait. I wouldn't necessarily place this trade, for instance, because, well, literally anything could go on between Russia and Ukraine, and it all seems to be kind of bad news at the moment. So I'd be looking for more downside on this. You can take that trade if you want to, but I'd be a little bit careful, especially doing that through the Asian session. We could just be getting something like this. You see this move down, this 1, 2, 3 candle pullback and another move down. We could just be getting that. We've had quite a big move there, a little bit of correction, and it goes again. But just I would favor this to move to the downside, because look at the whole movement of the price action. Can you see that it's basically a big downtrend? Sellers are in charge of this market. So me personally, I'm going to leave that alert set there, and if it breaks, I will potentially be looking to sell this back into this level here, and then further targets are those fib extensions. But well done guys if you got this yesterday after watching our video. That's exactly what we do the videos for, to help you guys out and to try and help you understand market structure and and what's going on. Right, AUDCAD, which is basically the kind of the subject of this particular video today. This is the big one for me, AUDCAD, because we are in this beautiful structure, and we are very close to the top of it. Depending on how you draw this resistance trend line, if you connect that typical that one and that one, if I just do that, we've got this as a potential false break, or it was a false break, and we've actually got another touch here. So we've actually got 1, 2, 3, 4 touches. This is a 5th touch and a false break. So again, we would say this is for educational purposes only, but as we are at resistance, is that an evening star pattern? I actually measure evening star patterns using the Fibonacci. I'll show you a little trick that myself and Mark do to measure evening star patterns. We actually do a similar thing with morning star patterns, but we take our fib from the bottom of candle 1 to the top of candle 2, and candle 3 has to have a bearish close below that 50% fib. If it does, then we would class that as an evening star pattern. And so it is. There's the, well, this has yet to close. It's got 46 minutes, but assuming it closes like this, it will have closed below this 50% fib. So basically it has to close lower than 50% of the range of candles 1 to candle 2. So that would be an evening star pattern, and we would look to place a sell stop below the low of the candle, stop below the high, and then take a trade. Okay, and we'll look for short and potentially a new low within this pattern, because this whole pattern is lower highs and lower lows. Okay, so I mean, we traded this one back in December. We had this lovely, I think it was engulfing, it might have broke the high of this one, engulfing seller candle. We placed, actually, we were cheeky, we placed a little sell limit. We got in with literally 1 or 2 pips to spare here, and we traded this to the downside. So it could potentially happen again. So this is nice actually, because there's quite a decent sized wick on this this candle 3. So if that was to break, then potentially, you know, that would be the sellers taking control of the market. So, you know, we like that trade anyway. If you're an end of day trader, have a look at this, see what you think. You know, does it meet your rules? Don't just take our word for it, but you can see what's happening with the structure. Now, of course, if for whatever reason the buyers remain in charge and this may break to the upside, and you don't get triggered into the trade, so, you know, in theory, no loss there. Now, what I would say is that if we did draw our trend line like that, incorporating all the highs basically, then it's possible that we might see one more move up. But if we do, you wouldn't get triggered in that out of day, end of day trade. We've still technically got a trend there. We're making high highs, high lows. So we haven't changed trend yet. But for that end of day trade to trigger, we'd have to basically change trend. So, and see this drop and break the trend line. So worth a go, in my opinion, worth the sell stop underneath that candle. But this is just for educational purposes only, and it's just an idea that you can have a look at and see what you think. But I like it. I like it. You can either trade it back to this low here, or I do love my excuse me, Mr. Norton. I do like my 2% trades, if I'm honest with you. I like my 1-to-1 and 2-to-1 trades, banking half at 1-to-1, and second targets 2-to-1. I do that a lot. But yeah, have a little look at that. AUDCAD, see what you think. Something else I spotted earlier, pound has had a little bit of a sell-off as well today. But pound yen, have a little look at this. We've got some support here. Got a very, very sharp move down here, and buyers have come in. Now, we didn't quite come into this zone, which is round about, look, the big number 153. Now what I'll be looking at is, first of all, you know, I can see this low, I can see this low, I can see, you know, I can see basically support. So I will be looking for price to come in, test this 155.50 zone, and potentially reject. Okay, something like that. Now, you got a couple of options depending on, you know, if you're an end of day trader. Okay, if you can't really look at the charts, then you know, you can place a trade today, and I would suggest that you'd have to place a sell limit. So what you're doing basically is anticipating, we're anticipating that price is going to come back into this zone, sell off, and then come back and into the 153 zone. That's what we're anticipating. So if you wanted to trade that, knowing that you haven't got any time tomorrow or wherever to actually look at the charts, then you would place what's called a sell limit order. So maybe just a suggestion, a sell limit at 155,500. You could obviously put it a little bit low if you wanted to, but just for the sake of this video, I'm going to put it at 155.50. And what I would do is I put the stop above this swing high here. Okay, that's where I put my stop, and my target would be down here, and that's basically a 1.8% trade, which is a decent R to R, a decent reward to risk, or risk to reward, however you want to put it. Now the optimal way of trading this is through price action, and obviously you need time. You need time in the day to basically watch this. But what you do is you would set an alert like so on your trading software, and you'd be looking for price to come into the zone, and then you'd be looking for a reversal sign like an evening star pattern, or maybe a bearish engulfing candle, what's called a shooting star candle, to happen here, or a reversal pattern. And then you can place a trade based on a smaller amount of risk pips. So instead of what did we have before? We had about so can you see the difference? That would be your end of day trade, okay, with about 142 pip stop loss. Whereas if you could intraday trade, you might be able to place a sell limit underneath an evening star with a tighter stop, maybe even half the risk pips, and get something like a 2.5%. So that is just, and that is always going to be the benefit of being able to intraday trade. But have a little look at that, see what you think. It does look like a bit of a head and shoulders pattern going on. This is our neckline, so a left shoulder, head, right shoulder, neckline, break, retest, sell off. It does look pretty good actually, but I will be placing an alert, so I'm going to place an alert let me just draw a fib from here to here. 50% fib comes in at 155.08. 61.8 at 155.48. I'm going to set my alert just a little bit earlier than 155.500 around here. So if price comes into that zone, the alert goes off, and then I'll be watching that. I can watch the 4-hour candles or 1-hour candles just to see if I get that reversal pattern that I am looking for. If I don't, of course, then there'll be no trade, and that's that. But if I do get what I'm looking for, then I can look to trade it if I still like it. Okay, so keep your eyes on that as well. Look at gold. Gold has had a massive move this morning, and into the afternoon. Absolutely huge moves, and we were looking at, we'd got these highs here from November 20 and January 21. So we were looking at those, and came exactly into that zone, just broke this high, and then started to sell off. So we had a high of the day of about 1974.48, and then literally the market then started to take profit on this. So looking at looking to the left, you know, looking at that when price came into this zone back in 6th of January 2020, it reversed all the way back down into this zone here, 1860, which you can see I've put this little box in. Also here, it actually dropped even further down towards 1830 and 1825. So I've got this box this support zone, what was support, as you can see, lots of support there, and support, resistance. You know, 1860, I can see this dropping into that zone sooner rather than later, put it that way. So I will be looking for opportunities to further short this, at least into 1860. You can see, you know, I'm an avid reader of candles, and also the size of candles, also the corrections that take place. You know, look at this. This is a very, very sharp move. One candle correction and it drops again. That one candle correction means that the move is impulsive. The size of the candles means it's impulsive. And I see this here, this correction as a correction, and I see this dropping into 1860. Might even do it during the Asian session. Who knows? Who knows? There is you can see here some resistance and support. So this could be an area about 1913, between 1913 1914. This could be an area where price could come into and reject. So if you are an Asian session trader, might be worth setting an alert in that 1912, 1913 zone, looking for a rejection. Evening star pattern, you know, I talked about this earlier, engulfing seller candle, something to indicate that change of momentum from the buyers into the sellers, and I'll be looking to trade that into 1860. So that is gold. We'll look at one more. We'll look at the Nasdaq. Now this has had a nice move down and literally reversed pretty much all of this move here. Now technically we are still trending to the downside. You can see lower highs and lower lows, as you can see. But I mean, look at these last two 4-hour candles, because you know, if this was a correction, then you wouldn't expect to see candles of such size and magnitude. Basically, you know, a normal correction will be something like this. A normal correction in a downtrend, you know, buy candles, sell candles, buy candles, sell candles, buy candles, sell candles. It's kind of it's like it moves in drips and drabs, is an old saying. But this is very impulsive, so it'll be very interesting to see if this is the start of a push to the upside. Now, what we could get is an inverse head and shoulder pattern, because already I can see this low, lower low, and potentially we could get a higher low. So inverse head and shoulder pattern, you know, basically is left shoulder, head, right shoulder, and then we'll be looking for it to push up, looking for a correction and looking for long. So just keep your eyes out for that. We may even test this trend line, reject, but looking at the size of these well, could be a correction, but I don't think it is. I'd be looking for an inverse head and shoulders pattern. Okay, we had something similar, I think, previously, if I remember rightly. Yeah, look at this. This is an inverse head and shoulders pattern. Left shoulder, head, right shoulder. So we had a low, a lower low, and a higher low. And then that was the start of an uptrend. So we might get something similar here. And just if you're not au fait with inverse head and shoulders patterns, the right shoulder does not have to be in line with the left shoulder. Okay, it just needs to be a higher low. So we've got our low, lower low. A higher low could be here, 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 here. Okay, so I didn't want you to go away from this video thinking it's got to be about the same price, which is about 13.6. It could do, oops, it could do something like, it could do something like that. Okay, it could do something like that. It could do something like that. It could do something like even that, which is just higher than this low. So, but that is what I'll be looking at for an inverse head and shoulders pattern, because that looks pretty, that move here looks pretty sharp. So, you know, and if you don't want to trade the inverse head and shoulders pattern, well, simple, just wait for it to break out, look for the first correction, and then, you know, look to go long when you get, and if you get a buy setup. Okay, so we want an impulse up, we want a correction, and then look for buyers to come into the market again. So you don't need to trade that inverse head and shoulders pattern if you're a bit unsure about it. So yeah, some interesting charts there, guys. Kiwi dollar, let's see what happens with that, whether we do actually have further downside or whether we make another move to the top of the structure, which we may do, we don't know. AUDCAD though is one of my favorites. We suggest, if you're an end of day trader, to have a little look at a sell stop underneath this candle, stop above the high. Have a look at that, see what you think, make your own mind up about that one. Dollar yen looks nice into that, towards that 155.50 zone, looking for another move there to the downside. Gold further downside in towards 1860, and Nasdaq, keep your eyes on this, might be an inverse head and shoulder pattern. If you want to just kind of stay out of the market on this one and wait, then you know you can wait for that break of that trend line, look for a correction, then look to get long then, because predominantly, you know, indices are a bullish market, and odds are that we will see this market start to make higher highs and higher lows again. It's had a fairly decent move, but you know, indices are bullish markets traditionally, and this is just, we would presume to be a correction in the market. So look out for that. So nice one, guys. So hope you've had a great day. Hope you made use of our video last night on Kiwi dollar and made yourself some totally free money. So from me, Nolan, and the team, we wish you well, and we will see you again in the next video. Take care. Bye.